Alright everyone, welcome back to the channel. Cowboy Trades here. So, Bitcoin whales are currently selling, the FOMC is one day round the corner. What's the next move for Bitcoin? Let's talk about it. Well, I've got multiple topics that I want to discuss on my channel today surrounding around macro Bitcoin, lower time frame Bitcoin, and the stock market. So, let's dive right into this, waste absolutely no time. In the lower time frames, what we've been talking about in the last couple of episodes is this very specific region over on the VPVR. In the lower time frames, we were looking at the 1 hour, and we were talking about this bounce that was likely to come up to some of these areas over on the VPVR, which is why I was saying at the 19,000 region, which is where I was recording yesterday, I wouldn't be looking to actively short because we could come up to these VPVR zones between the regions of 19,800 all the way up to about 20,200. Now, as you can see on the 4-hourly time frame, if I zoom in, we came right up to these. We came up to the lower bound, so we didn't actually come to the point of control, which was once again right on that 20,000 mark. We came up to 19,700 approximately, so we're about $300 off on that one. So my short did not get filled on that one. Like I said in yesterday's video, I was going to have a short at 20,000. That is no worries. You know, as sophisticated traders, we're not going to be chasing every single trade on this one. What I will be waiting for now is for the FOMC meeting, which is obviously coming tomorrow. More about that in the next couple of minutes. But like you can see over on this chart as well, with that 20,000 region, this is also correlating to the 4-hourly EMA ribbons, which we had another reversion to the mean on. This is how we basically traded our previous trade using reversions to the mean, and now we've just completed another reversion to the mean. I think it's fairly safe to say that we are going to be pushing down into new lows. Like I said in my last video, when we were around about this 19,000 region, my price target in the immediate short term is 17,300. I do not care about the lows down here at 18,500. People are talking about support at 18,500, support at 17,600. The only target that I've got my eyes on in the immediate short term is 17,300. Anything between that target and where we're at right now is noise in my opinion. So like I said, lower time frames, before we dive into the higher time frames, now coming over to our oscillators, it's telling a different picture than yesterday. Like we said yesterday, we were expecting a little bit of a bounce because of the oscillators, and this has now completed. Now you can see on the higher time frames, like the daily, the squeeze momentum indicator is about to trickle into the negative. So the breakdown has technically not even started on the squeeze momentum indicator, as we're still in bullish territory. We're losing it very rapidly though. The MFI is actually bouncing in the past couple of days, and this is probably because people have tried to prop up the market with volume, but because the stock market's coming down, because the markets are coming down in general, there's more selling pressure. So this is why we're seeing the MFI holding up at a slightly higher valuation than if we're looking at something like the RSI. I didn't even need to pull that up to let you know that, because as you can see down here on the RSI, we're around about this 39 region. Over on the MFI, we're basically on that 39 region as well, but you can see the RSI is already turning down ahead of this, and you also have to remember that the RSI floor down here is at 30 and the MFI floor is all the way up here at 20. So the MFI is definitely looking a bit more overextended than the RSI at this moment in time. That being said, that is going to give us more momentum to the downside when we do finally flip bearish on some of these more macro indicators, which will start firing bearish as we do take out that 17,600 region, which was obviously our quote-unquote Bitcoin bear market bottom, haha. But nonetheless, MACD's turning down. We talked about this a couple of days ago. This on the daily time frame didn't even get a pullback yesterday. If we come down to lower time frames, you can see very nice to see the squeeze momentum indicator has started to trickle into bearish territory, and in the past 4 hours it's really stepping up. So this is what I like to see when you see some of these lagging indicators like the squeeze mom on the 4 hours start to really push back down bearish. That's when you know that bulls are about to get their kneecaps smashed in. But nonetheless, MFI on the 4-hourly time frame came up to the heart line and it's starting to turn back down, and we previously talked about this. You know, you can look at the MFI at 34 and think that's a great time to buy, but previously, you know, you can see there was times over here we were literally the same level at 19,700 before we catapulted down $1,000, and this is only on the 4-hourly time frame. You have to bear in mind as well the daily is saying there's a lot more room to move down. So I think the direction on all of these is much lower. So that's the lower time frames. I also want to talk about the FOMC meeting before we jump into some of the on-chain metrics. Like I said, some of the whales are selling, so we're going to talk about that now. Like I said, the next FOMC meeting is literally 1 day away. Stay tuned on the channel. Make sure you subscribe, turn notifications on, because I'm going to keep you up to date on all of this. I'll be posting a video as soon as we get our FOMC results, but I'll be talking more in depth about this later on today in some of my stock market videos. You can see there's about an 18% likelihood of a 100 basis point increase right now. And I think because this has now recently been put on the table, as you can see, yesterday when we talked about this, it only came out about 6 days ago. So it is now a week from today that we've been talking about this 100 basis point increase, and subsequently I think that's why the markets are kind of starting to price this one in a little bit. But nonetheless, I do think if we get 100 basis point increase, we're going to rapidly break down. Now with this, we've looked at this FOMC fractal before, and you can see I'm only going to spend a minute on here because I just want to show you when the previous FOMC dates are. With this, we've placed the horizontal ray between every single one of these data points. So you can see there was an FOMC here, FOMC here, here, and there's also one down here. Now, interestingly, I actually drew out this line about a week ago. So this is not something that I drew out like today or before I recorded this video. If you have been watching my videos, we drew out this FOMC fractal expecting us to come down to somewhere like here for tomorrow's FOMC. And as you can see, we've perfectly done this. Now, you can see that we do have this trend of pumping on the day of the FOMC. So I definitely advise a lot of caution if you are trading on the day. Personally, what I'm going to be doing is I'm going to be looking out for the results. If we get 100 basis points short, I will be 100% shorting. If we get 75 basis points, I pretty much think that's priced in. So I think we'll probably be very choppy on the day. We'll either do nothing or we'll pump like a few percent. But then after that, the day after that, I am going to be absolutely shorting, because as you can see, you know, the trend is very clear. After these FOMC meetings, whether it takes a week, sometimes it takes a day, but you do get this breakdown to the downside. Now, what I wanted to highlight is this one specific FOMC meeting over here on the 4th of May. As you can see, there's only been really one other time where we've been in a apex of a massive triangle pattern, whatever you want to call it, a converging channel, converging trend, whatever you want to call it. Like I said, there's only been one other time where we've been at the apex of one of these and we've had our FOMC date, and this was back over here on the 4th of May. Now, what you can see is we were literally so close to breaking to the downside of this on the 4th of May. We obviously had our bearish FOMC. It was priced in though, because everyone was predicting 75. It was 75. We came up to the top, and then the next day we got absolutely rugged back down. So it is very possible that tomorrow we could do something like this, and we could even come back up to the 19,700, make a lower high from yesterday, and then after that get pushed back down. Am I telling you that you should be longing on the FOMC? Absolutely not. I'm telling you that within 24 hours of the FOMC, no matter what happens, we're going to be massively capitulating. And looking at how we were at the apex of this and we had the bearish FOMC meeting, and as soon as we broke to the downside of this is once again another reason in which why yesterday we talked about the next Bitcoin trade, why I'm potentially looking at setting up a trade if we do have a daily candle body close beneath 18,600. It's technically the support right here is at 18,700, but I'm personally looking at 18,600. That is what I feel comfortable with. You can also see there are lows right down here, and then as you do break beneath this 18,600 region, there is literally nothing in the way of you making new lows. So this is the very specific reason why I myself am waiting for 18,600. You can see that sometimes you do have these tiny scam wicks, and it might look like it's about to come to a close, but then you just immediately zoom back up to the top on the daily close. So keep your eyes on this daily candle body close at/below 18,600, and I will be shorting Bitcoin to the downside. And once again, like I said, my lower time frame price target 17,300 is the only thing that I've got my eyes on right now. In the higher time frames, I'm going to be shorting, probably using about a 5 or a 10x leverage down to this 15,800 region. If you want to learn more about why I'm specifically targeting this region, check out yesterday's video. But nonetheless, let's move on from here. I also want to briefly update you on the total cryptocurrency market cap before we do dive into some on-chain metrics. Really just a super quick update. As you can see on the right side of the screen, we have a point of control from your VPVR, your volume profiles for the visible range. So this visible range is just incorporating the data here that we've had in this bull market. And then what I've gone and done is I've got a fixed volume profile down here, and this is from August 2017. And the reason why it's from all the way back here instead of the VPVR focusing on these regions is because we don't have a lot of data traded at this region where we're at, you know, the 700, 800 billion. This region that we've been trading at, as you can see, we spent 2 weeks over here in 2018. We spent about 3 weeks running through this in 2020. And then, you know, as you can see, I mean, there is no data traded around this region, which is why when you look at the volume profiles to the left side of the screen, there is absolutely nothing holding us on anymore. And if we look at the left side of the screen, I'm even going to be conservative. I'm going to draw this down not from the point of control, but from the second point of control, round about 928 billion. And as you can see, even if I think I could even draw it from the third one down. Let's see, the third one down, right on 911. And as you can see, we've lost, whether you're looking at the volume profiles for the visible range, which is on the right side of the screen, or if you're looking at the fixed volume profiles on the left side of the screen, we've got no data traded around here. There's going to be no more bids or asks at these prices, in my opinion. As you can see, the next point of control that I would be looking at is this one all the way down here. Now, this is pretty brutal. This would be meaning that we're going to kind of do something like we've done with Bitcoin already, where you capitulate beneath the 2018 all-time high. So a nice bear market potential for the total cryptocurrency market cap could be something like this. Like I said, we've already lost the point of control. So if we come down to the next point of control, let's be conservative and draw it from the top of the range. You can see this could imply about another 36-37% drop down to about 560 billion. In my opinion, this is the next move that I'm going to be looking at for the total cryptocurrency market cap. Now, let's wrap up the video. Let's talk about the on-chain metrics. I really just want to dive through these really quickly. So whether you're looking at the Bitcoin profitable days, you can clearly see the average trader is in the negative zone right now. Whether you're looking at the MVRV score, and bear in mind, the MVRV score is really just a complicated version of the realized cap. The realized cap obviously telling us the average price at which Bitcoins were purchased at, and the MVRV score simply tells us the difference between the market value and the realized value by plotting this standard deviation test on this thing called the MVRV score. And as you can see, when you do, or what should I say, when the market price, meaning the price of Bitcoin right now, capitulates beneath the realized price, another way of saying that in layman's terms is Bitcoin is currently trading beneath the average price at which traders have bought it at, meaning the average trader is under the water. So with this, you can see if we zoom in, the market price is currently trading beneath the realized price, the realized cap. Well, this is actually the realized cap. So let's look at what the actual level is over on the realized price instead of the market cap. But as you can see right here, 21,400 is really the average price at which Bitcoins were previously purchased. So once again, whether you're looking at realized price, profitable days, MVRV score, the new pool, which tells you when you are in these capitulation territories, which by the way we're getting converged on this. As you can see, we've got lower highs, but we've also got higher lows. So we're really getting condensed, squeezed together. And this is also implied in the Bitcoin chart. You can see we're getting squeezed together closer and closer and closer. And I think while the apex of this triangle was on the 2nd of October, I think we're going to break out within the next 2 days, approximately 1 day after the FOMC meeting. So to wrap up the video, I told you that whales are selling. Now, a couple of weeks ago, we also looked at the whale shadows, and as we highlighted at the time, you know, there were multiple orders of, you know, 5,000 Bitcoin being sold, 5,000 Bitcoin here, 5,000 Bitcoin there, a couple of thousand Bitcoin here and there from older wallets. But now if we go into some of the retail wallets, once again, retail is still accumulating. No surprise there, but this is what we care about. We care about the whale wallets. Just wanted to give you a quick update, like I said, not diving into this too much. I think it's pretty self-explanatory. You can zoom in and you can see since the last time we have talked about the Bitcoin wallet sizes with more than one Bitcoin, also known as institutions, whales, whatever you want to call them, they've made a new low in September. So it's clear to me that at this moment in time, Bitcoin whales are not interested in buying. When you look at things like the whale alerts, you know, there's tons of Ethereum, BNB, Bitcoin, XRP just being transferred over. It's been predominantly sent to Binance, but nonetheless, there's a lot of money moving around the markets today. There is a lot lot of volume coming in that is pushing Bitcoin back down. And like I said at the start of this video, my friends, this is the reason why I think we're moving all the way down to 17,300. I think we're moving down here within the next couple of weeks. I'm going to talk more about when the actual lows are going to be in the next video, so keep your eyes out for that. That's all I've got for you for this episode, my friends. 17,300. Then in the macro time frame, let's go down to 15,800. I'm ready for new lows. We've been patient for a while. We've been sitting on the sidelines. When new lows present themselves, that is when a large amount of my capital is going to get deployed. So as always, my friends, Twitter is over here at 618_cowboy. All I've got for you for this episode. Cowboy out. Peace.